Hey everybody, Joshua Phillips here at Churchill Mortgage, along with my wife Amy, who sends these market updates out as well. Boy, it is the last day of February and I'm looking out my window and it is gorgeous today. And I hope it's gorgeous wherever you are. I bet a lot of you are thinking about wanting to get out there, drive around, look at homes as you think about maybe purchasing a new home. Otherwise, hey, it's great for the mood. I've been much more happy recently with this warmer weather. Anyway, well, let's get to what's happening with the market and with our weekly market update. So I always like to start here on CNBC and with this headline from today, this morning, Fed's favorite core inflation measure hits 2.6% in January as expected. We like that as expected, although we'd love better than expected. But inflation at 2.6% on this particular report, that's good. You know the Fed's goal is to get to 2%, but this is a move in the right direction. I think this has been, this news like this is going to help mortgage rates, which we'll get to in a second. Just pull up one more thing here on this chart. Always, we'll look at the 10-year treasury yield. Boy, it has been dropping. The 10-year treasury yield down to 4.2%. I think back at the beginning of the year, we were around 4.7, 4 point, look at that. Almost 4.8%. So we have really been seeing, I've seen something that Trump is really focused on trying to get that 10-year treasury yield down, which will help mortgage rates. I don't know why, but boy, it's been improving. Yeah, from that high around 4.8 down to 4.2. That is a very nice improvement. And that is leading us to, we'll pull up here to a mortgage-backed security chart. We are seeing the best rates we've seen in about the last 90 days. So that is great news. So if you've been following these videos in the past, you'll kind of know what this is about. But in case you haven't, these are mortgage-backed security charts. Mortgage-backed securities are where mortgage rates most directly derive their values. Mortgages are bundled and sold as securities, and this is the result, is the price of those securities. And all you really need to know to read this chart is green is good for mortgage rates, red is bad for mortgage rates, and the higher the security price, the better mortgage rates are doing. Now, as you can see very quickly here, we are in a V shape, and since about January 13th, 14th, we have been on a very nice run. We've seen mortgage-backed security prices improve almost 200 basis points, which converts to maybe 3/8 to 0.5% better interest rates in that short period of time of just the last 6 weeks or so. So this has been very, very nice and refreshing as we come into the spring buying market. Now, I do want to pull out here, as we typically do. Let's pull out to a year because we do want to keep things in perspective. So, and if we could go back even further and look at a 2-year chart, but if we just look at a 1-year chart, I've talked about this, I consistently talk about this, that we saw where rates were moving in the right direction from April to September of last year and really got down into the mid-low sixes. We were even starting to see some, with paying points, maybe getting into even the upper fives. But so that's where we were if you look at the chart. And then we kind of really fell way off up until this January 14th date. We saw rates go up about, almost a full percentage point. So we're headed back in the right direction, but we're still a good ways off of where we were last September. So yes, great news. We love the bounce. We love seeing rates improve, probably on average 3/8 to 0.5%, but we still have some ways to go. Now, certainly hopeful that this will continue, but we do have to be careful. We are at a very critical spot right here. You'll notice like right here today, we are like right at the same spot, where we were headed up before and we went down. So we do need to watch this critical spot. Also, this is called a stochastic chart at the bottom. And when it's at the top, that's called overbought. And when it's at the bottom, oversold. We are in overbought territory. So we may see a correction. We may see rates potentially pull back a little bit, may go up a little bit before we see them get better. I just hope they get better and better and better. But man, this has been great to see this bounce the last 6-7 weeks. Again, the best rates we've seen in about 90 days. If we go back here to early December, So overall, really good news. Well, if you'd like to talk about getting pre-approved for that home purchase this year, please reach out to Amy or I. We're certainly here to help. And if you want to talk about specific mortgage rates for you and options available to you, happy to discuss that as well. And if you're thinking about refinancing, I think you got to hold on a little longer. You really want to see us break back to at least the level we were at last September. I think we'll get there eventually, but I would encourage you to just be a little more patient. Hopefully we're moving in the right direction, and we will have an opportunity to refinance your loan at some point in the future. So, hey, have a great weekend. Get outside and get some sunshine, and let us know how we can help you with your home purchase or refinance needs. Take care. Bye.